Let's check out the end of day. Okay, so SPX closing at 59.80, 85. A little bit bearish after the Fed's dot plot, which was slightly hawkish, as was their stance on policy, with projected higher unemployment, lower growth, and higher inflation in the near term future. So, out over the next like 3 to 4 quarters. Fed fund rate estimates dropping at a slower pace than last assumed in March. This leaves us with a slightly lower close day over day, and into the back half of the week. We do have some weakness here. This is our second close under gamma neutral on the monthly. If that continues to push up, we're going to want to keep an eye on gamma neutral for the AM expiry contract, which is currently down at 59.30, but will likely rise not only today, but with the morning expiration on Friday, which is our quad witching OPEX. I think if there are any effects to be realized from SLD, we'll likely see them after the holiday, so on Friday or Monday morning. But do remember that during the overnight session or during the holiday session, we're probably going to see some mean reversion back to the upside from the bulls that are going to probably try to capture a positive price on those AM contracts. So I would say we probably see bulls try to push back for 6,000, where a lot of their exposure is locally. But after that delta and gamma are gone, price will be a little bit more free to move into Friday's close, and then especially on Monday. It's a big expiration, and a lot of the short vols packed into it. So next week could be kind of exciting. Out here on ES, we broke back through the uptrend in the earlier part of the day and then ultimately failed the breakout. This does leave the potential for a retest down here below 60.31 and below the bull confirm, which then opens range up quite a bit. The prior week close being around 59.80 and below major support at 6,000. Next support to the downside of that is 59.2750. To the upside, 60.56, but it's been hard to hold that level, and we keep losing it. So I would say things have still a bit more of a bearish bias going into Friday. Dollar rose moderately, but so did yields. Well, kind of back to flat after the Fed decision, especially at the top end of the curve, where the Fed has very little actual control. Correlation moved down into the end of the day, so some push into dispersion. A little bit of volatility shorting, I think. I mean, we saw vol at least come down from prior to the decision. And a little bit of a turnaround there, but overall, I mean, if we look at the longer time frames here, correlation has been breaking down at a fairly consistent rate, and a little bit more so recently. Almost back to the levels we were at in early May on Tuesday, with today modulating that a little bit, but I would probably look for 1 month correlation to continue to push up. Although I do think there is still quite a lot of incentive to short that like 60, 90-day historic volatility as it continues to fall. So we're starting to move into the period where like the 60-day vol is going to start to come down. Although the opportunity to short that would be in an environment where IV was higher. So they'll probably meet in the middle, and when that happens, we'll probably run into some pretty heavy volatility shorting. My Gex chart's missing teeth. That's because it's the end of the day. Wipes the data. Maybe we'll work on getting that to persist so you can look at it overnight. I mean, it's just going to be but it would just be a big pile of gamma at closing price. Commodities continue to shoot up, obviously, with the U.S. on the brink of war. There's a very good chance that people are going to continue to speculate on commodities. However, this does seem to be less precious metals and more, energy, agricultural, industrial, and material driven. But a very, very significant recovery on commodities here, and a break back above like 108.77 is a pretty big deal. So I don't know if any of you guys actually trade like Bloomberg Commodity Index, but if you did, good stuff. That's a CBOT. Leverage on the carry trade falling, but picking up a little bit into the end of the day. That's also in a pretty significant downtrend. Forward yield on volatility ending the day just a little bit negative after rising to positive yesterday briefly. And I believe it closed yesterday just slightly positive, but definitely pushing up as demand for long vol rises. Bond volatility also picked up yesterday, although I don't think it will today. And a little bit of out of the money put demand yesterday as well. With skew kind of falling a bit, might be some indication that short vol is breaking down. Breadth looking way worse. Stocks over their 20-day moving average falling to 42% of the index, roughly around stocks that are over their 200-day moving average, and stocks over their 50-day moving average falling to 63%. Still seeing a breakdown in correlation between cash VIX and VIX futures. I don't know how much lower this is going to get, but if it does turn around and something spikes volatility right now, we could get like a very, very serious move to the upside in VX. This is back below 87.4. It's probably got some more room that it can move down, but if anything spikes vol right now, we could get, like 4.1 to like 5.4% move to the downside, potentially. If there were like something like missiles, maybe. I don't know how the market's going to react to that. But something like blowing up Karg Island or Israel attacking Iranian oil reserves. I'm not sure the U.S. joining the war would be enough like of a. I don't think that's a shock at this point. Like we're probably not going to get congressional approval to join the war. Bear steepener up a tiny bit. And then lastly, out here on the technicals, another lower low and lower high today as we continue the downtrend towards a breakdown of this top. However, a loss of 59.22 would be the first actual signal of that, and maybe even better, like the EMA 30 here. And that can open up a retest down at the MA 200 or 58.3766. Then below that, you have the monthly targets 57.73, 56.96. The failure to get back above 60.31 seems kind of significant. If this is where we're going to top out, there's quite a lot of room for a corrective move to the downside, even beyond 56.96. There's downside gaps all the way down to like 53.09, and then there's the prior lows 51.19, 48.53. So I mean, the start of a move down, depending on the situation and the potential for recession driven by higher oil prices, could see quite a bit of a move. Did you see my question on Discord? No. A lot of negative news and barely any market reaction. What makes you think we don't just go straight up? I think institutions have been net sellers over the last like 6 weeks. I think hedge funds are net short, and just like all their positive flows over the last 2 weeks have just been from covering their pain. And then retail stopped buying like 2 weeks ago. So I don't think anyone wants to buy it any higher. The only thing people want to buy is tech, and it's all overvalued as right now, especially in light of potential drawdown in earnings. We have an international conflict involving one of the world's largest oil producers. The Ukraine-Russia situation is unresolved, and we don't have any information on when the debt ceiling is going to get raised, which means that the U.S. Treasury is probably going to eat $9 billion of issuance and refinance it above 4%, which is insane. That, and then even if we do pass the debt ceiling, we're going to tack another $3.6 trillion onto our deficits, which we just got downgraded for prior to the $3.6 trillion addition. So I mean, there's a lot of bad stuff. It's not I'm not saying we won't go up, but there's no buyers out there right now. There haven't been. We kind of ran out of buyers back in like May OPEX. We've been mostly trading sideways since then. We don't have a new all-time high, so we still don't technically have a reversal, right? We had a new normal. The market immediately in April, the market immediately priced in the best case scenario for everything. And so far what we've gotten is none of that. Right? We have no trade deals despite them being, promised, and the market rallying on the back of those trade deals. We have increased tariffs on cars, steel, and aluminum, right? Those didn't go down. Those went back up. We've got 2 weeks till the deadline for reciprocal tariffs to kick in. Then we got another 2 months till China tariffs kick in. And we're about to go drop bunker busters on China's largest oil supplier. I'm sure that's going to be real great for our trade deals. Meanwhile, China's running around the globe making trade deals with literally anyone else who will buy their shit and just not worrying about the US at all. They don't give a shit, right? They can just sell their goods elsewhere with no tariffs. Why bother with us? But then on the US side, right now, inventories are absorbing the shock of the increased tariffs, which are running at like a 23% rate across the board before they go up. And then so as long as those inventories remain, producers, manufacturers, and retailers are going to eat those costs. But when those inventories dry up, not only are they going to not order more of those goods, they're going to pass forward any other costs on goods that they have to sell. So we're looking at like an inflation, like a supply shock on the inflation or the tariff side that's going to drive inflation, and a potential supply shock on the oil side as well. So we get two of them. In COVID, we just had the one, and they closed the Strait of Hormuz yesterday, and prices per container or per like poundage or whatever the it is went up to like $57 from like 20. So yeah, we're not in a great situation. That and our entire government is run by imbeciles, with maybe the exception of Basant. I don't know. It doesn't look good. I'm just saying it doesn't look good. On the technical side, it looks like a pullback. On the option side, it looks like a pullback. On the macro side, it looks like a pullback. But, Trump might come out tomorrow and say we're going to stay out of the Israel-Iran situation and markets can rally on Friday. And then, on Saturday, he can be like, nope, I was just kidding. And then they can dump on Monday. Welcome to 2025. Anyway, thank you guys so much. I hope you all have a great night. Enjoy your holiday. Happy Juneteenth for those of you out there. And I will see you Friday in the AM. Later.